Kevin says, I'm trading bull put credit spreads. I think you mean 70% out of the money. I'm sorry, 70% probability. You wrote 70% out of the money. I think you meant 70% probability, delta of 0.25. When should I consider closing or rolling the spread? And you added a comment later, Kevin. Let me go ahead down here and see this. Expiration is 12/31. My specifics trade was Tesla. Okay, 550, 540. Credit was 137. Stock price was at 640. Let's build it. Let's see what we've got. December 31st, Kevin. 13 days to expiration, 550, 555. All right. Okay, perfect. I'm going to look at something real quick, Kevin. Oh, I apologize. Let me do that right. I did kind of do it right, but bid-ask spread got wonky on us. Net credit of 137. Let's just keep it simple. 1037. Oh, need a zero there, don't I? 1037 and $9. All right, there's your net credit of 137. Missed that part, Kevin. Here we go. All right, stock currently trading at 695. Let's move this down here. Let's get a better risk-reward profile. Why is that so wonky? Must be too much volatility in this case. I did the right structure, right? Sold the 555, bought the 550. That's right. Okay. All right. Hold on one sec. Let me do something here real quick. Going to yell at the programmer in a minute. Don't know what that is or why that is. Okay. In any case, sorry, max return 37.7%. 137 expected profit, Kevin, off of a risk of 363. Okay, what I wanted to do here real quick is look at the research just for our short option. Let me jot this down here. What am I looking for, folks? What I'm looking for here is what the current probability is, 93.4% on this position. Delta down here of 0.06 at this time, okay, for what I have, Kevin. Maybe after the stock has fluctuated around in price. That's what I'm looking at there. And what else did I want to look at? I think that's it. Okay. So, in general, I'm sorry. I wanted to look at the stock chart. My apologies, Kevin. Let me take a look at the stock chart real quick. Up above the 20-day moving average. Have seen growth today, so we've got a new, it's really close, but a new positive MACD moving up. I know it's hard to see. Let's arrange that to maybe 1 month. See if we can get a better view of this trailing one. There. Okay, so the MACD touched the signal line, the EMA9 line, excuse me, but it didn't drop below it. Now it's coming back up. Okay, and we're above the 20-day moving average. Why do I want to see all that? Okay, the reason why, Kevin, is personally for me, when I trade bull put credit spreads, I have a specific set of criteria. I look for stocks that are trading above the SMA 20. Okay. At the same time, I want to look for a positive MACD cross, what we kind of saw where the MACD, the blue line, has moved above the signal line recently. So I have something that looks like this, well, within the last 2 to 3 days. And my EMA line is maybe this. So I've seen a positive MACD crossover where the blue is going positive. Yours just touched recently, but then bounced off it, so it's still in the right range. Oh, shoot. Sorry about that, folks. In any case, so SMA lines, everyone has their own way of doing it, and I'm going to put MACD, and you had mentioned the probability and the delta. That's perfectly fine as well, because they go sort of hand in hand. Okay, why am I jotting all this down? My general rules of thumb, Kevin, for what I'm going to consider managing a bull put credit spread is if the stock reaches within 1 to 1.5% of my short put strike price. We have sold the 555 put. So 1% of 555, of course, would be $5. So if the stock drops down to about 560 or so, I'm going to consider now might be the time to manage the position. If I'm in the trade, I looked specifically on power options for stock trading above their SMA 20 and a MACD. If I see the stock fall below the SMA 20 and the MACD goes negative, that is a big warning sign for me. Something's going the wrong direction, and I may have to consider taking action soon. If all three of those are met, I'm doing something to adjust or close this position. I might just be closing it if I'm at a specific loss limit of the maximum loss expected. If I'm at 50% of this max loss, I may consider closing the position. Okay? Because I can't afford to take a 60, 70, or 80% loss in the bull put spreads, even though you have a very strong and powerful 3-to-1 risk-reward ratio. Kevin, I still don't want to take more than 50% because then your balance of your trading plan starts to go out of whack once your losses start hitting 60 or 70% on the leverage spread trades. I can show you an example of that real quick for my approach. Yours might be a little bit different if this is common what you're doing, this 30% target range. My target's about 15 to 19 with the higher probability of 85% or more. You're at 93% now because the stock has moved up. So triggers. Anything, Kevin, that you use to enter this position, meaning you wanted the stock to be trading above a certain moving average, whether you use EMAs or SMAs, in that case, if those reverse, that's a warning sign to consider to maybe you're going to start potentially managing or looking for ideas to manage or roll this position. If you use MACD, of course, and they see a negative MACD, or maybe you use RSI. I don't use that personally, but if you use RSI and the RSI turns from going a positive range up to 80, but now suddenly goes below 50, maybe you're going to consider that. And if the stock reaches within 1 to 1.5% of your short put strike price, that's usually a guarantee that I'm adjusting the position, getting out of the position, or moving to a new position. Okay? Especially if I'm at my 50% target for the loss. Whatever criteria that you use, Kevin, are ones that you should consider when they reverse, using as potential triggers to exit your position, exit your spread, bull or bear. Okay, same thing. So in a bear call credit spread, I may have initially looked for stocks under the 20-day moving average with a negative MACD. But if MACD goes positive and the stock suddenly goes above the 20-day moving average, it's going the wrong direction. Think about it this way. On a bull put credit spread, let's clear these up here. I look specifically, as I mentioned, for let's go to the chart. That'll be easier. Where is it? Okay. I wanted to open the position when the stock was above the SMA 20. I had my positive MACD as well. Let's take a different stock. Let's say that these reverse, but there we go. Let's say that these reverse in a sense. I'm pretty sure this is here now. DAR, the other one might be better. No, not this one. I apologize. I'm sorry. I'm getting my stocks confused. Yay, perfect. Okay. So let's say that I entered the position. It didn't even look good. The MACD was never positive, but let's throw that out the window. Let's say I entered the position here when things were looking good, and let's say I had a positive MACD, so I entered a bull put here. Once I started to see this, and this happened, I'm considering closing the position. Why? Because here I probably could have gotten out with a 40 or 50% loss on my spread, even if I had 10 or 12 days to go. And the risk is, oh, it looks pretty attractive here, it's starting to come back up. Here I'm probably at a 70 or 80% loss. Here I was probably at assuming expiration today, Kevin, I'm sorry. Here I'm probably at an 80%, 85, maybe even a 90% loss on the spread. And here I'm likely at 100%. So with the stock trading at this price here at 88, yeah, I might have sold, let's say, a delta of, if it offered these prices, maybe an 82.50 put and bought an 80. So right when it started to trend down, and right here when I'm in 1%, this is where I likely would have closed and gotten only a 40, 50% loss. Here, yeah, I could have closed it and probably only seen a 20% loss. And that's of the max loss expected. It's not that high, but it's still a loss on the position. And then before I know it, 70% loss, maybe close to 90% loss. And today I'm still with a stock below 82. If I'd sold to 82.50, we're halfway between. So that's still a 60 or 50% loss. So I would have been better to get out here in this range than to try to outplay myself because all the indicators were going the wrong way And definitely here, I was in the 1% rule, wasn't I? Right about here, I was in the 1% rule with the 82.5 strike. Those are my general rules. Can you use delta 2? Yes, you can, Kevin. You said you used a delta of 0.25 when you entered this position. Your short option delta was 0.25. I don't do it myself because that's not one I pay attention to. I use probability instead of delta. There's nothing wrong with using the delta. Maybe if your delta goes from 0.25 to maybe 40 or 0.45, that might also be an exit trigger for you. You're close to at the money now. 0.45 means you're probably near this 1% rule. Okay, so it's a good time to consider manage it. It's just a different way of looking at it, but it's probably signaling that those other ones have hit as well. Any technicals you were using are probably now reversing. If your delta has gone up to 0.45 from 0.25, excuse me, any of those technicals you used are likely reversing. You may be within that 1% rule as well because you're almost at the money with that delta, aren't you? So you could use that as one also. For further defined information, further explanation on this, Kevin, it's always a good review to go through that. I thank you for your question. If you go to the free webinars page, it's poweropp.com/webinars.asp, or if you just go to Power Options Home, you'll see a link for webinars. Go into the options strategies section. Now, if I'm not logged in, it's a public page, but the most recent webinars are only available to subscribers, so not on the trial. But you go further down, there's probably 30 or 40 webinars that are available for you. Keep scrolling down in the strategies section and check out this one from 9/19/2018, 8 ways to manage a bull put credit spread. The first 15 minutes or so, we talk about the trigger points that we just sort of reviewed of when to know when to consider managing. And then we talk about our preferred 8 ways that we might consider managing the bull put spread if those triggers are hit. Okay, so that'll give you a little bit more insight into the 10-15 minutes we just spent covering the review today to help you out sort of with that scenario also.